Well, hello, YouTube. Hello, X. How's everybody doing tonight? Tonight, it's time for the Daily Factor. I was promising to have the show on at 8 Eastern, but it's 8:30 instead. And I know I'm wearing the same clothes and the same hat, and I look exactly the same as when I was on the Rod interview, but I've been doing nothing but working on the computer all day. I took Jax for a walk, but other than that, I've just been sitting here. So I apologize that I haven't got cleaned up for you guys, but we go get cleaned up as soon as this show's after. But actually, I have more stuff to do after the show's over. I've been really busy lately. All right, so let's see what's going on with the market. I'm a little bit late because I just made a video for somebody in my Discord talking about explaining something, and it was too hard to explain over text. So I made a quick video, but that took a little bit of extra time. Anyway, I am sorry I am late. Oh, get this. I made the video and I did a great job explaining this. It was a complex topic. I did a great job explaining it. I made about a 10-minute video, covered all the bases. Everything was perfect. And I wasn't sharing the screen, of course. So I went back and I re-recorded it with sharing the screen, and it wasn't near as good the second time. I missed a couple. Anyway, I think he understood it and appreciates it. All right. Well, but that makes me so frustrated when I don't share the screen. I've been doing really good about sharing it on here, but I go make a video for somebody and then I don't share it. So, all right. Well, what are you going to do, huh? What you going to do? All right. So let's look at the market really quick, see what futures are doing while we are waiting for folks to get here. Looks like they're up 9 basis points. That's better than down, 90 basis points. Like it's been going down to, a point a night, a point or two a day for last week. We got in a pretty nice little downtrend there, had a bear cross on the 30-minute time frame and went from 68, 63 down to 66.55. I mean, it's only a 5% drop, but it still wasn't fun. It's only 5% in the SPY, but of course the stuff I have and the stuff a lot of high yield people have is based on better, more volatile stocks. So my stuff was probably off 10%, or probably not that much. I went from up 13 to up. Yeah, I was off 10% because I was up 13 about a month ago. And at the lowest point right here at this low, I was only up 1%. So I dropped 12% in the past month or so. But anyway, like I say, my stuff's a higher beta compared to the rest of the market. Anyway, this is good to see. I hope it's not just a relief rally and a dead cat bounce, but we'll take it one day at a time. It's good to see you're got the trend going the right direction. It is definitely good to see. So we'll get on with the show in a second. I just like to see people get here. We're going to be doing Msty Monday tonight, and we'll also look at Coinbase because it's another Bitcoin surrogate. Yeah, NASDAQ looks good too. It's actually up 17 basis points. Let's look at Bitcoin. Oh my gosh, did the news come out or something? Did news hit about anyway, whatever. That's, of course, it looks like it was just there for a second and then sold off and left a rejection tail, and now it's right here. But anyway, going the right direction. We're trending up instead of trending down. So we will take it. All right, who else here? Is anyone here yet? Is anyone here yet? Oh, we got 3 comments. We have 3 comments. Good evening, Durzo. Good evening, Greg. Good evening, Brad. I'm glad you liked it, and I promise the first time it was so much better. I almost sent it to you anyway, just for the audio. I hit all the points, and the stuff I said made more sense. I mean, but anyway, but still, that part of it is visual and stuff. So, no big deal. All right, so let's get on with this thing. Let's see what's going on here with the daily factor. So the daily factor, of course, is based on my own metric, the max factor. What it does, the max factor doesn't look at total return. Total return is deceptive. Total return is made up of NAV return and of yield. and you can put them together and you have total return, but it doesn't give you the full picture. I had to make a better metric where I look at NAV return and yield as separate entities. And not only that, and then I also look at the risk of the fund generally, how crazy the fund is generally. And I throw all that in together, and I give what I believe is a better metric, and it's the best. It's a measure of risk adjusted reward. Now, and also I have to thank Ambassador Kwan for this. I made a little formula change in the max factor to consider the tax consequences of dividends. Dividends are taxed at your normal, 37% if you're in the highest bracket. And but your NAV return isn't really taxed at all. It's deferred until you sell the fund. But even if you sell the fund, even if you trade in and out of the fund, that's a capital gain, and it's 20 to 25% depending on your bracket. So right there, dividends are just mathematically about 50% less valuable. Anyway, so I've adjusted the max factor to give you a true look at risk-adjusted after-tax return. Ambassador Kwan invented the methodology I'm using, but I just applied it to what I was already doing in the max factor. But Ambassador Kwan calls it real cash yield or something like that. Anyway, I still think of it as more of real cash return, but whatever, it's a great way to do it. And so I made that adjustment like last Friday. So anyway, I think the max factor is constantly getting better. Hey, Susan, thanks for being here. All right, so let's get this show on the road. Let's see what we're doing here. I'll take that banner off for now. Or actually, it won't get in the way. Well, it doesn't matter. Okay, so let's do this thing. I forgot where I put these sheets. I think I haven't pulled them up yet. I know I have a lot of windows open. There's stuff on here I don't want to forget about and that we might want to talk about. And so anyway, but let's do this like this. Okay, we'll do Coinbase first. It's going to be a quick one, and then we'll do MicroStrategies next. Now, if there's another Coinbase surrogate, I don't really know of it. I think I got them all the ones that are at least 3 months old. If there's one you know about that's not on here, put it in the comments. I'll make sure to have it on here next time. But let's just go yield chasing. Let's start over here with yield. Okay, so we have ICOI from Bitwise paying about a 206.49% yield. Now, that yield looks higher than it really is, and the reason is because the NAV's down 35%. Well, luckily, the max factor has an answer for that. I'm not going to give this thing extra credit for being up 206% when part of the reason it's up so much on a trailing 12-month basis is because the NAV's sucking lately. So the max factor parses all that out, and it's still worth something, but but anyway, that's the trailing 12-month yield. We have to have something to look at, but I want to assure you that the max factor doesn't think you're going to get that much. And even if you were, remember, you're going to be taxed at a high rate on it, so that's factored in as well. All right, but in any event, now look at this thing. The NAV's gone from 43 to 27, and so it's down 35%. And this is the volatility. Is actually, that's an old metric. I put that on by mistake. Ignore that. It's the same thing as the stable DEX, though. But volatility you want to be low. The stable DEX you want to be high. You want something stable. So ignore volatility. This thing is about a quarter as stable as the broader market. So the broader market's 4 times as stable. So this is going to be a wild ride. It's going to be a wild ride. All these are going to be a wild ride. They're all unstable. And in fact, ICOI is the most stable mathematically of the bunch. But in any event, all right. Coney pays 180% yield, but I mean, heck, it's dropped from 747 to 579. That's only 22%. That's not quite as bad as ICOI, but it's a little bit more volatile. So anyway, COIW paying 87%, but this thing's dropped from 43 to 33. That's not great either. It's about 25% drop. Then we have CO2, this thing 24 to 21 and change, or 20. It dropped up. What is that? $3.02, which comes out to about 12%. I think I know which one's going to win, and I think this is the one I want to. especially when you consider the tax consequences. From a tax basis, you'd rather, you want a high yield, but it makes it a little bit less valuable from a taxing standpoint. So anyway, let's just see who it is. I think we know. All right, yeah, COI2, COIW, and that makes sense. Rex and these two do a good job. These are kind of hot messes down here at the bottom. Coney and ICOI, it can work, but I mean, anyway, but yeah, COI2, come on. I mean, Snap's only down. I'd trade 12 for 56 any day of the week, and I just would. You get, and look at this. Look at it this way. Say 87 is 35% more than 56. I don't think it is. I don't. But just say it was. I mean, 5, 10, 15, 17. Let's see. 56. Actually, 15% more is like 73 or something. But say this were 73. Would you be better off taking the 73% yield? Well, after you factor in taxes. Not really, especially if you're going to suffer more NAV loss for it. I'm just saying, because you have to factor in everything, and not to mention it's even a little bit less volatile, but they're all super volatile or super unstable, however you want to look at it. All right, so that's it for that one. Now let's go to the Mr. one. Now on Mr, we know who's going to win also, because I'm comparing it with the stretch, stride, and strike. But we'll also look at which one are the best ones of the MicroStrategies components. Once again, I'm betting it'll be MS2. MS2 kind of has the hot hand in the max factor. They just do a good job of risk-adjusted reward. But I mean, we'll keep an open mind. Let's see how it plays out. Coin analysis, Mr. Monday. There it is. I think this is it. All right, so we'll start with yield chasing. Okay, 250%, but heck, the underline's down 50%. So, come on, drop from 19 to 9. I mean, it could work. I have some of this, but I'm holding the bag on it right now. But anyone who bought this on the day it came out is still way up. I mean, it's just like anything, just like any stock investment. NVIDIA is the best. It's probably the best stock in the world right now. But depending on when you bought it, you might not be up nearly as much as I was when I bought it. If I happened to buy it, April 9th, and you maybe bought it July 3rd or whatever, even though we're both in the same stock, the path dependency matters anyway. But yeah, I've had Msty for 11 months and I am underwater quite a bit, 20% or something. It's a small allocation, but it cost me a lot of money because I had a pretty nice portion of it between December and March when the market, and I think I sold it the last day of March because the market was cratering, but I'd already lost so much by that. I mean, I realized a pretty big loss in Mr. Anyway, it's whatever. MST, this one's double leverage from Defiance. I mean, double leverage, look at that, down 72%. Not that there's anything wrong with that. If who knows? If the market goes up, the double leverage will pay off. It works both ways. IMST from Bitwise. We also saw ICOI from Bitwise. This pays a more reasonable 160%. But I mean, the NAV is down the same as Msty's. And they're about the same stability. I'd rather have Msty out of those two, just eyeballing it, but whatever. MSTW. Now this one is a reasonable 151% yield, but the NAV's down nearly 60%. These are all just, I mean, what you can't really do much when you're in a high yield stock and the stock's price is just dropping like this. I mean, none of them are going to be good. We're looking at degrees of less bad. This one pays 56%. The NAV's probably the best one of the bunch. This will probably still mathematically work out the best. I bet this one wins. Anyway, but then we have Stretch, Stride, and Strike. Let's talk about Stretch for a minute. Stretch is incredible. What are they doing here? I mean, it went from 97 to 99 this quarter when everything else based on MicroStrategies was down. Paid an 11% yield. I mean, it paid more yield than Stride and Strike, and Stride and Strike were, had worse NAV or whatever. So anyway, I think we know who's going to win here. It's going to be STRC and then the rest. So yeah, I mean, STRC is a monster. I'm looking for stuff to put in my portfolio. Like I said, I was talking to a friend tonight about a fund, and it looks like a good fund. We were talking about SBAR. Well, but then while I was researching SBAR, I looked at CAIE, which is a similar type fund. It looks like a good fund. And really, XV looks like a good fund. I mean, if y'all want like a really super stable fund that still pays a decent yield, but really STRC is a super stable fund that still pays a good yield. Let's check this out. Let's check out SBAR versus STRC stretch. All right. All right. So let's just look at the stretches yield. It paid 249, and okay, it's a quarter year, so that 250. So it's 10. It would pay $10 on 94. So it's what, 11%? I guess just exactly what the graphic said. SBAR, 320 pays more. It pays a little bit higher yield. And the SBAR is definitely steadier and less crazy. I wonder the other night when we had Random Sunday, was SBAR on our list? I think SBAR was on Random Sunday. I think it came in really high too. I mean, didn't SBAR and XVOL or SVOL win anyway? But let's compare. Okay, so we're talking about really stable investments that also get some upside, but a pure stable. Let's compare stretch to CAIE, the Calamos auto-callable bond. All right, well, they look like they're similar. I mean, the Calamos auto-callable bond did lose a little bit of money when the market pulled back, and stretch just went the other way. I mean, stretch is amazing. Stretch is amazing. Or it's young. It looks amazing on paper. Let's just say that. Do your own research. All right. So, did you guys like that? Was that a good presentation? What should we do tomorrow? Tesla Tuesday, something like that. I'm going to put my. Let's see. I had a bunch of bills come due, and the YouTube check doesn't get here for a couple of weeks. And I went crazy on AI. I ordered like 4 or 5, or I ordered 3 different AIs and a StreamYard premium. And anyway, they're all coming through. So I'm starting to put the banner up there. In any event, let's look at some other stuff. So let's look at, let me show you this in case anyone wasn't here for the afternoon show. You might be interested in maybe how my portfolio did and what I'm planning on doing with it. Let's rank it by allocation. So my biggest allocation is Alti. It's at 18%. Well, it's coming down to 15%. Not because I don't like it. I just, that's all I have room for. Okay, cash is at 14.0. That's coming down to 0. I'm spending that cash, not all at once, but I mean, it's, I'm making plans. Okay, blocks is at 14.73. I think that's good, 15%. I mean, by tomorrow, it'll probably, this thing goes up so much in bullish markets. It'll be at 15 soon, especially if the other ones drop. YQQQ, I mean, this one's coming down to 10. And I'm really thinking about, after talking with that friend of mine tonight, I'm thinking about maybe just hedging in a different way, maybe dropping this and putting in some SBAR or some CAIE or some stretch, something like that. Anyway, but for now, it's going to be, it's coming down to 10% one way or another. And then I might replace it and put something else at 10% that has a hedging type component to it. Anyway, but we'll see about that. K-yield, I'm really happy with this. It's at 11. Next time the market dips, that thing needs to be at 15. BITK, I think I'm fine with that at 6. That's fine. It's that's a Matthew Tuttle fund based on Bitcoin. WPay, I need more of that. In fact, I want this one to be 15. Okay, now, but I want QLDY to be 15 also. And so I think I'm out of money, but we'll look into that. iGold and KSIL, between the two of them, they're 7. That's probably fine. I wouldn't mind having them at 10% precious metals, 5 in each. If the market dips and I have some cash, I may make those go up. But for now, I'll just leave them. And there's my Msty. It's, it's not enough to worry about. Okay, so that all adds up to 101.7%. Okay, the problem is I don't have room for ULTI. I've already told Matt Holcomb, the PM, that I was going to buy it, and I chickened out because I wanted to wait for the market to stabilize. Well, the market stabilized on Friday, but I didn't believe it, and now the market's really stabilized, and now I think, well, man, I could have bought it so much cheaper. So anyway, here's what I think I need to do. I'm going to probably, WPay's at 5.8. I might take that to 7.5 and then get 7.5 of ULTY and make a WPay ULTY combined allocation of 15. And then I love QLDY, and that will move to 15, and that'll be right there to 101%. And the market moves all the time. So but that'll get me in the ballpark. So those are the things I have planned right now. The only question marks are, the one thing I still need to decide on, do I want to keep YQQQ? It does really well when the market goes down. Or do I want to put in maybe something with bonds or something, I'll tell you what I'm really excited about. The guys over at Quantify were on Rod's show this morning, and they were talking about, David from Quantify was talking about, he's the PM, the portfolio manager, or I think he's the founder. He's the head guy. They were talking about, or their fund is BTGD, where they have Bitcoin and gold and smash it together, put leverage on it. You get 1-to-1 of each. Well, they're talking about doing the same thing, but with income, and they're talking about using Bitcoin and treasuries. And those, or no, I think it was gold and treasuries. Well, whatever it was gold and treasuries, and it was going to pay an income. Something like that, or something like SBAR, something like CAIE, I think could fit here in this YQQQ slot. Now, like I always say, people always say, why did you get YQQQ? Well, remember, it was a year ago. There was nothing out that did anything like that. Now I have more choices for hedges. The fund that I was talking about that was gold and treasuries was doesn't come out till December. So if that would have been available last year when I bought this, I may not have got it. So that the portfolio changes as different stuff becomes available, and also as I learn different things. I mean, as I make videos, I'm learning while I'm making the videos too. Like tonight, I learned more about SBAR. I kind of knew about it, but I kind of got more behind the scenes. So, so anyway, that's my portfolio right there. I have some more comments here. I like comments. Yeah, I'm with you, Chad. I'm with you, Chad. I mean, not only ULTY forever, it looks like I'm going to get 7.5 ULTI also. And those are, and I have blocks. So I have plenty of allocation to high beta names in there that should pay a decent yield. And in the case of blocks, should get a lot of upside. In the case of ULTI and ULTY, maybe not so much, but still, I think they play a part. And yeah, I definitely like it. Yes, if it keeps paying 8 to 10 cents, I'd be happy. Yes. I mean, you and me both. You're stuck with ULTY. Yeah. Well, I'm sorry. Yeah. So, Chad, we were talking about that in case other people don't know. We're going to do I'm going to do a show like Rod did, and maybe I'll do it over Thanksgiving. I'm trying to think of a good time for it. Maybe I wouldn't mind doing a nighttime show, but maybe even a weekend show. I don't know. Maybe it'd be better. Maybe I always loved the Wednesday night before Thanksgiving. That was always my favorite day. One of my favorite days of the year, because everyone goes home to their hometown. And so you see people you haven't seen in years. There's tons of drinking going on and other stuff. I mean, with my friend group, and we always had such a great time, but hitting the bars and stuff. Well, now that I don't do that anymore, maybe I'll do something on that day, or maybe we'll just do it on a work night around 7:00 or something. But yeah, Max and Friends late night would be good. And I have several ideas for it, and I'm not trying to copy Rod, but I really like I like to talk, and I can talk all day long. I have no problem talking, but it's fun when other people do it too, and I get to listen to what they say and react. And that's why I like to sit here and read your comments. That's basically what we're doing. You're just texting me, and I'm commenting on top of it. No, ULTI is not leveraged, but let me show you something. But it effectively, it's going to act like leverage, and I could show you exactly where. Okay, like blocks. Blocks isn't leveraged, but it's effectively leveraged. It goes up like 3 times as much as the market and down 3 times as much as the market. They don't use leverage per se, but they use something that I call local leverage or situational leverage or tactical leverage. And I'll show you what it is. And ULTI is doing the same thing. So no, it's not leveraged in the way their other funds are. Their other funds are legit leveraged financially by borrowing or, but this is leveraged in a different way. So I think I have a trade up here. So I do. Here's Rex, ULTI. Here's a circle trade right here. I just put in here for the sake of argument. Okay, the tactical leverage comes right here. Do you see where the slope gets steeper right there? The lightning bolt part of the spread, or the whole thing looks like a bolt kind of. The steepness of the bolt happens because of the sold puts. When you sell a put, it's a bullish play. So if you blow through a put, it causes an extra loss. Well, between the two strikes, between 130 and 110, you have double long exposure to the market. But just between those two strikes, so the whole thing isn't leverage, but you have local leverage, tactical leverage, like a tactical nuke, or I don't know. But so yes, you lose at twice the rate when you're between these, twice as fast. You lose as if you have 200 shares instead of 100 shares. The problem is you also have 100 shares of stock, and that goes down too. So you have a big loss. Now, as soon as you get beyond 110, you quit losing at double the rate. The 100 shares of stock still is free to go down to zero. Or, some funds use a synthetic, but it doesn't matter. It's stock, synthetics, all the same difference. You can lose all the way down to zero. The thing is, the reason it's called local leverage, tactical leverage, between these 2 points, you lose twice the rate. The good news is these things pay a yield. So if you don't, or they're for a credit. If you don't go under 123, you realize the income without any side effect or whatever. So yes, this thing is going to be a hot mess. But just like blocks is, it should also go up super fast. The thing they did that people haven't even started to appreciate yet, I don't think anyone realizes it. Maybe you guys do because I talk about it nonstop. But the thing about this is they've improved. And don't tell Jay or anyone I said this, but this strategy is, I think, an improvement on the ULTY strategy, and just as far as this goes, because they've uncapped some upside, because half of it's a lightning spread, but then on top they sell a call spread. So, and that's Jay's strategy. Jay was the one that brought the call spread to yield max. That's why they did it to make, and yield max funds have been performing better since the call spread. It's still not uncapped upside. It's not totally uncapped upside like blocks has, but it's partially uncapped. So, here's what I really think. Here's the real improvement on the block strategy. Occasionally, these guys at ULTI and block says this too. Occasionally, these guys at ULTI will double the amount of puts just on the out of the money put. That turns this trade into a caller. This is what I'm saying. I think this is an improvement on the ULTY strategy because it gives you an income and it gives you a chance at upside in an extreme move. So I'm excited about that because I like the combination of the two strategies. But yeah. So. But my point was, but if they have 12 they have 21 positions right now. This is ULTI. This is as of last night. They have 11 of them, or 11, 20, 21. So yeah, like 12 of them are like this: full downside, partial upside, but full downside and a little extra downside right here. Right between the two strikes. That's more than half of their fund. But on 9 of the positions, they have this structure on. Okay. And I think they just put that on the other day on Friday or something. And if you look, this is also going to make you bring in less credit because you have to spend extra money to buy the put, so they just put it on the other day and the market's gone straight up the past 2 days. So they spent money that in hindsight, they would have rather not had to spend, I think. But I mean, of course, you can't predict the future. But sure enough, let's check this out. And I'm not being critical of these guys at all. But the diversified darlings, let's look at this index. And the worst performing one today was ULTI. And ULTI actually beat it by a few points, but both of them were big laggards. And I'm just saying, I believe that ULTI would have done a little bit better had they not spent the money on the protection. But hindsight's 2020. I mean, anyway, and then ULTY does pretty much like it normally does. How much was the market up today? It gets about half the upside of the market. I mean, market's up 1.5. It was up 88. Yeah. It also just gets about half the net. When the market was cratering last week, it's protected someone on the downside. No, it doesn't get half the downside, but it doesn't get as much downside as the other funds. So anyway, but yeah, so that was a long way of saying that they don't advertise it as leverage, but it has tactical leverage. It has tactical leverage. And I've never read that in a book. That's something I just made up. Local leverage, tactical leverage, because it's only between those 2 points. It's double leverage between those 2 points. What are ULTI's underlines? Well, that's a great question. I'm glad you asked me. Let's go right here to the terrific trio. And I downloaded the trades last night and put them in here. And we can take a look at them really quick. They're very similar to ULTY's underlines. And I think that kind of explains why they've moved about the same today. Not exactly the same, but there's some overlap. Okay, so this is ULTI's stock positions, and they don't give tickers. So they actually have a good deal of cash, 11% cash. That also could have caused them to underperform a little bit. They weren't, because they have 11% cash and 6% money market. So they're about like me, about 20% of my high yield portfolio is in cash. Well, if you add 11 plus 6.52, you get 17, 18% or something. So yeah, that could have caused a little bit of underperformance, but in any event, they have Sarepta, whatever you say that, therapeutics, Iron's in blocks. I don't know if it's in Alti, but it's in blocks in LFGY at various times. LFGY, Bloom Energy's been in all three of them at various times. Sunrun, Solar Edge, Core Scientific, Figma, Trade Desk, Applied Digital, Nebius Group, Gemini Space Stations. That's one I haven't seen before anywhere until this fund came out. Marathon. Now, Marathon's a common one. It's in LFGY. It's in blocks. It has been in ULTY at different times, I think. CleanSpark. CleanSpark's been in all of them, I think. AST Space Mobile, been in all of them. USA Rare Earth. Now, this one I don't think I've seen anywhere except this one. Circle Internet Group, that's in all of them at various times, has been. Upstart is a very common one to have in blocks. I think Upstart, I've seen it in blocks in LFGY. I don't think not blocks. I've seen it in LFGY and Alt-Y. Anyway, then they have Rocket Lab, and Rocket Lab's lots of times in those funds. So lots of, and then NewScale Power, which is SMR's the ticker. So, those are their underlines. And let's look at K-Yield's underlines. Now, theirs are a little bit different. Not really fair to compare them to Alt-I and Alt-Y. They're actually more like blocks in the sense that they earn about the same yield. And I think they're going to get a little bit more upside than ULTY and ULTI. But I don't think they're going to get as much upside as blocks. Blocks is a monster on the upside. An absolute monster. But let's look here. Let me see. I do have the positions in here somewhere. I guess they're here. So this is K-Yield. They have AMD, And that's a covered call. They have AppLovin, and that's a covered call, not fully covered. They have 400 shares, but they only sold 3 options. So they have 1/4 of the portfolio free to go up as far as it wants to. They have Broadcom, no options, just Broadcom stock. You know, they have Bitmine Immersion. And this is as of Friday night. I haven't updated this yet tonight. I've been too busy working all day. But anyway, Bitmine Immersion, and they have covered calls, fully covered. They've sold all the calls. BWXT, it's BWX Technologies. They have covered calls, fully covered. Coinbase, full covered calls, fully covered. Foursquare, covered calls, fully covered. GDX is an interesting one. Fully covered calls. Galaxy, they have Galaxy. I think the other one had Galaxy. Fully covered. HIMS, covered calls. Hood, it looks like covered calls. Howmet Aerospace, fully covered. IBIT, now they just have options. They don't have any IBIT stock, and they don't need IBIT stock because they bought a call and sold a put, which is the same thing as having IBIT stock. Between now, it doesn't get a dividend if IBIT pays a dividend, which I don't think it does. But other than that, it's the same risk and reward as just having IBIT, and it frees up capital. So, and it's just like having IBIT stock until these expire. And you don't even have to worry about theta decay because you're buying a call and you pay time premium, but then you sell a put at the same strike price. Well, when you sell a put, you bring in time premium. You put the trades together, and it's just like stock. There's no theta decay. It goes up. If the stock, just goes up or down at a 1-to-1 relationship. That's why it's called a synthetic stock. Anyway, then we have Intel. It's fully covered. On the Qs, they did something different. I made a video about it. It's a spread. We don't have to talk about that. On Roblox, they did a poor man's covered call, which is more complex. I made a video about it. But on the rest of them, I just think they're basic covered calls. Yeah, basic covered calls. They have Reddit, Shopify, silver miners. And I look on the silver miners, they're just long. There's no options. So, they have a few things that are just long. So they have uncapped upside on some of these. I mean, it's not, these guys aren't as, they aren't as just like, I'm going to do one strategy and just do it over and over again to mine the most amount of yield. This is a real hedge fund type. All of these are hedge fundy type situations, but this one particularly. Then they have this Teradyne. I've never seen Teradyne in any of these other funds, and they have a covered call, almost fully covered. So anyway, I think I like ULTI, but I really am more excited about K yield because ULTI, I have blocks and I have ULTY, and to me that covers that lane. Not that I still may not want to get some, but it's a little bit further down on my Christmas list, on my shopping list, let's just say. But anyway, that was a long way of saying it's covered, or it is levered, but not like the other funds. Does the same apply for the call side? Well, no, that's a great question, BR. No, on the call side, it's the inverse because they're selling the one. On the call side, it's the inverse because they're buying the one that's closer and selling the one that's further. Whereas on the puts, they're selling the one that's closer and buying the one that's further. That makes them be double long on the put side between the two strikes. On the call side, it's the opposite. They're actually only single long there because they have, and that's why there's that flat spot. If they hold it till expiration, there's a spot where you're capped out. So no, it's actually the opposite on the call side. But that's a great question. Hey, Trucking for Dividends, how are you? Oh, it's Joe. Okay, you changed your YouTube handle to my X handle. Good to see everyone. Hope you enjoyed the green candle. Hey, Joe. Well, thanks for being here. Okay, we covered ULTY's holdings. Max, if you ever had 100K to drop right now, what would you buy? That's a good question. If I had 100K right now, what would I buy? That's a good question. I don't know. I have my bases covered as far as retirement stuff goes. If I had 100K, what I would probably do is I'd do like BR or SB. Or I don't know if BR does this, but SB does this. I just start running poor man's covered calls. And I would do some of these trades myself. The only reason I don't right now is, I've had a divorce and I also had a drug problem. So I don't have, luckily my retirement's okay, but I don't have like a ton of extra money sitting around. But yeah, if I just had money that would get, $100K that just dropped in my lap and assuming everything else was taken care of, I would use it. I would do the same thing SB's doing. And and a lot of guys are doing. Rod's doing it. Coach is doing it. Wheeling stuff, poor man covered calls, stuff, and I love that kind of stuff. I do have a small account, but I usually on my small account, I usually take shots with it. And, I'll do earnings trades, or sometimes I'll just take a directional shot. Like today I bought puts. Well, that's not working out so well. They don't expire till next Monday. I still think, I'm still little suspect about this market. But anyway, that kind of money, I wouldn't mess around with taking directional shots. I'd sit there and I'd pick out 10 stocks and I'd run poor man's covered calls or on like 10 different stocks. I'd do basically what SB's doing. He's and there's other people. Mark's doing it. Mark's running all kinds of stuff on the spine stuff. I would do that kind of stuff. If, like I say, is K yield is a weekly payer. Yes, it is a weekly payer. So you were thinking 2K in QLDY, 4K of blocks, or equal split between TS2 or okay. So I guess you have 6K extra to spend. Maybe I missed this. Okay. But anyway, I'll look at that in a second. I'll look at that one in a second. So you were thinking, I really like QLDY, 4K at blocks. I mean, it's hard to go wrong. I'm not as much into the single stocks, but if you had to get a single stock, I mean, Tesla and NVIDIA are really good ones, even more so on NVIDIA, because, Elon's a little bit like me. He could sometimes say something and, that he shouldn't say, and that makes the stock go kind of crazy, or I don't know. But I mean, NVIDIA, if I had to get single stock, those would be good ones. And the Rex funds are really good single stock ETFs, in my opinion. I think that'd be fine. Why not do 2,500 of each of them or something? But yeah, I think that'd be fine. So Netflix it needs to split because it's too big for me to even do in my small account. I can't even do an earnings trade on it. When you just have a $20,000 account and you have something that's trading that high, even if you can afford to do I like to do 3-leg risk reversals on earnings stocks, which is also just basically taking a shot, but it's just so expensive on those. So yeah, Netflix, I would be all for the split. Okay. So then Dave, so you're saying ULTY, ULTI, or both? I really like ULTY, but I get that, but it matters when I bought it. When I bought it, let me show you. I like ULTY a bunch, but I get why that a lot of people don't. So I'm not trying to talk anyone into it, but I'm on drip and my retirement's covered. I don't need the money to live off of. Of course, I'm on drip. So, and I bought it I just want to show you. So I bought it last December 10th, which was kind of at the high. I mean, I did terrible for a long time. I could have been one of those people by April and said, just screw this, man. This stock sucks. Just like the people are saying now, they just bought it at the highs. I mean, unfortunately, but let me show you. I didn't, do great, but I really like ULT. With dividends reinvested, it's pretty much it's close to what the market's doing. Yeah, it dropped a little bit more than the market. I didn't like that. But so here's the thing, though. I bought it in December, and then right about here, when it looked like the market was going to crater, I sold it and then bought it back right after Trump canceled the tariffs. So I improved my risk reward. And I think when I sold it the other day, I figured out with drip, I sold a third of it. And I figured out with drip, I had made 21%. because like I say, I sold it up here and bought some back down here. So, so I had a better experience. I mean, there's other people that bought it, a few months ago when they're underwater. And so I'm not trying to talk anyone into that liking it. Maybe I got lucky. Maybe I would, whatever. But I think it's a solid fund. ULTI though, I have hope for that one. And here's the reason that I have hope and that I'd probably say both. So here's the reason. So here's kind of their standard trade. They it looks like so far they mainly don't use the collar. This is mainly their standard trade. So yeah, this looks all right, but if the market goes, if the market goes up, you make money, but then you're capped to a point. And the market, in the case of this one that I just threw in here, the market has to go up more than 28%. So you're capped out if the market goes up, the market's dropped since I put this on, but let's just say the market was hang on a second. Let's just do it like this. If somebody had this on today, I mean, it's not a very fair comparison. Let me try to show this better. But this is, all right. So, well, that's not what I wanted to show either. Let me show this. I have a good point here that I like to explain this. And this is I'm making the case for why ULTI is better than ULTY. I'm going to show you because you could make the case that it's a better thought out strategy. And like I say, I hope Jay or Scott's not listening because, I mean, it doesn't matter. They don't care. They don't listen to a retail guy that, with a $20,000 trading account who's got a divorce and, and the drug habit. Granted, my drug habit was 8 years in the past. I've been sober for, it's mainly alcohol, but anyway, I've been sober since August 1st of 2017. So this August 1st was my 8th anniversary. All right. Been sober the whole time I've been in Austin, and that's a miracle to be sober in this town because it's a party town. All right. So let's look at ULT. Let me just pull up a different example here. No. Okay, it went back to how it was. Okay, well, what I really like about this and the case that I can make this better is at expiration, yes, it has a flat spot. So theoretically, this is fully capped upside, just basically like Alti. But unlike ULTY, it also has full downside. It has the downside of blocks where it gets all the downside plus a little bit because of the local leverage, and it's fully capped unless it goes way up. Okay, but I think the way they're going to do this, and they have been doing this, they're going to manage early. Okay, so if you put on this position, it doesn't expire till next Friday or whatever, but if you put on this position, and let me show you this, and that this is, I think, the kind of the game plan. I'm making a duplicate page here so I can overlay the two strategies with each other. Okay, then I'm going to, on this one, I'm going to take the options off and just leave the stock on to compare the two. But basically what I'm trying to show you is Alt-I is really badass because if managed early, it's basically just like they have stock. Okay. The white line is the lightning spread strategy, or is the other strategy, is their typical strategy, the stock plus the four legs. And you can see in a big down move, the white line's underneath the red line. The red line is just stock. The red line is just stock. But so you can see the white line has the flat spot there, and it loses a little bit more on the downside. Okay, but they aren't going to wait till that. They're going to manage it early, and they have been. If managed early, it's just like owning stock. They've hacked the system. It gets the same downside as stock, maybe a little bit more in a big down move, same upside as stock if managed early. Alt-Y can't say that, and here's the real clincher. If they do use the strategy where they do the double puts to turn it into more like an Alti type strategy, a ULTY type strategy, in other words, a caller, and they do that on about half the portfolio. If they do that, then, and if they manage early, they have the same downside as something like ULTY, but they have stocks upside. I mean, so, and that's what I think they're planning on doing. So they've got the system hacked. Now, but don't get me wrong. It's not like ULTY doesn't get upside. What they'll do is, as it approaches, they'll just roll out. They'll progressively take in gains, and so they get plenty of. They can get upside too if the market goes up. But this thing right here is, I mean, that may be the perfect trade. You have asymmetric risk on the upside, full upside, and if I was making a fund that had to do one trade, I might just do this trade the whole time. I mean, that to me is so I have a lot of hope about ULTI. But we'll see. We'll see. So I definitely both. I think it's definitely both. Well, I'm not saying you're good to hold ULTY. It depends on your circumstances. I mean, if you, a lot of people don't, no matter how much, even though it pays 80%, ULTY, if you saw my video, the NAV's going to drop 50 to 60 to 70% in an average year, every year. Doesn't mean it can't go up for 2 or 3 months like it did, but over the course of time, the NAV of that's going to drop just because it pays such a high yield. So, I mean, if that's something you don't want to happen, if you don't want to see a reverse split, no, get out of ULTY. I'm just saying, but if you're the kind of person like me that's holding it for the long term, reinvesting dividends, and you don't need the money to live off of, I'll be all right. But no, if you're trying to live off it and you don't want the NAV to drop, because remember, when the NAV drops, the dividends will go less. They'll go down from 8 to 12. They'll go a little bit lower. Now, if you drip, you negate some of that. But then on the other hand, if you drip, you can't spend any of the money. So why the heck you in it? I think if you're trying to live off the money, I think there's better ones out there. So, and I'm just assuming you guys are younger. It's different when you're retired and you're spending money that you've already earned, investing money that you've already earned. And I have enough NAV upside. So no, I'm not saying that at all. I'd say be careful with ULTY or ULTI, or any of these, but especially ULTY, because it's just, so no, that's not what I'm saying. I'm just saying I'm going to hold it, but everyone has a different situation. That's what I was trying to show you. I've had it for long enough, but let's say I didn't buy it until, July of this year, July 10th of 2025. I mean, I'd be mad too. I mean, it's getting killed and the SPY's doing pretty dang good. So a lot depends on, now I'm not saying it won't come back, but I mean, but I would just be careful with that one. I don't want anyone to come back to me a year from now and say, I listened to you like ULTY so much and I bought it because of you. Yes, I like it so much. I may have a different circumstance than you guys. And I don't like it as much as I used to, obviously, because I did have 28% and I've taken it down to 18 and I'm getting ready to take it down to 15. Not because it's a bad fund. One thing, to lock in the gains I've had, because I did maybe get lucky by when I bought it and I sold some at all-time highs. So I did it to lock in the gains. And also because there's better alternatives out there. I am going to add some ULTI, and I have K yield and QLDY. And so there's better alternatives. So don't buy it and have total faith in it because of me. I just don't want anyone to have too much faith in it. I'd rather tell you guys I'd rather not be as excited about something and you guys miss out on it than be super excited and everyone buys it and then they don't like it. I mean, and I could be wrong also. Do I think ULTI can sustain the NAV better? I think it'll be pretty close. I mean, ULTI has only been out for a while, but heck, ULTI may be more like blocks on the downside. But yeah, it may have more like blocks on the upside too. So it's anyone's guess. I'll say this. I think ULTI would sustain the NAV better in a runaway bull market. But I think ULTY will sustain the NAV better in a down market. Because ULTY they do callers pretty much all the time, where ULTI so far is mainly doing where you have full upside and full downside. So no, I don't think that. And if you're worried about if NAV's a concern, I wouldn't get either of them. I mean, if that's a big concern, these things are for income. And also, we don't even know. Let's give ULTI a few more. Get a couple of payments in on, and see what kind of yield it pays and that kind of stuff. But no, I think that they're both, risky. And I mean, here's the other thing, but with me also, like I say, I have retirements covered, and I have, probably, I don't know, 5 or 10% of my overall worth in this high yield portfolio. And then out of that, ULTY is only 15% of, you know what I'm saying? So everyone's situation is different. I'm not going to let it hurt me, but if you aren't like that and you have a big portion of it, just be cautious. Okay, Max, those were shares I was talking about. 2K. Okay. 4K of blocks and 100,000 between. Okay. You're looking at 50-50 between GLDW and GDXW. Okay. Well, I mean, I don't know. And really, I'm not supposed to be giving financial advice. None of us are. And I need to start putting a disclaimer up there. Today on Rod's show, I've never worried about the disclaimer because I'm very cautious not to give. I always give both sides of the story and stuff. But I've been hearing about people that on Rod's show that got their channel shut down and stuff. So unfortunately, I'm going to need to make a little disclaimer and run it, just to be on the safe side. And I'm going to be sure not to tell people to go do something like that. But let me say what I would do if I was in that situation. On the 100,000, I see what you're saying on the 100,000 question. Okay. What I would do with the 100,000 if I was going to put it in funds instead of doing like SB does and doing wills and, poor man's covered calls and stuff, what I would actually do is I love the allocation I have. I would just boost this. I would use this allocation 15% because this is good. I mean, I like this, and this can change over time. But so yeah, mine would be like this. It would be 15% alti, 15% blocks. Y triple Q's going. It would be something steady right here. Maybe S bar, maybe who knows. Then it would be 15% K yield. I want to spread it out more because these all have different qualities. K yield's a different beast, and W pay is really good. I never talk about that one, but W pay is really good. It gets a little extra downside too. That's why I only have 15% of it. But like I say, ULTY is protected on the downside, so the two of them together make a good pair. But I would do this. I would just add to this. I would just bring this up to the, if I was going to put it in funds. I didn't understand your question, but I do now. But I do think this. I think you pick good funds. But yeah, I can't tell you to do that or whatever. But I mean, what I would do is I would use my funds. I like my funds better than your funds. But no, you got some good ones in there. Your funds are my funds. Look, you got QLDY, which I've loved for a long time. You have blocks, NV2 and TS2. I would get them if I was interested in single stocks. Those are good funds. GLDW and GDXW. I think Round Hill does a good job. I mean, let's look at the lightning spread really quick and see how it finished today. I have a thing that's just lightning spread, and the lightning spread is really the QLDY is really impressive. I don't know where my sheet is. Let me pull it up right here. But I realize we have the lightning spread on the diversified Darlings portfolio, but let's just look at it by itself. I mean, this thing pays twice a week, and I mean. So yeah, but that's I get what question you're asking now. I would just add to my existing allocations. All right, historical, okay, chart. All right, so here's the total return since inception. I'm just lining up the Qs versus QLDY. This is amazing. I don't think I could line ULTY up against the Qs and it would get this close. It would do better on the downside than this one does. This one gets a little extra downside when the market moves down, and ULTI doesn't. But overall, since we've been in an up market, I think ULTI would be about right here compared to the Qs. This is amazing. This thing's amazing, especially in a bull market, this lightning spread. I mean, right now it's 4.6 compared to 4.4. I mean, that's amazing. And you can look at the daily results. And on the daily results, you can see this on this day, it lost a lot more than the Qs. On this day, it did. It doesn't always lose more than the Qs, but on this day, it did. On this day, it did. But then on up days, it made more than the Qs on this day. Hang on, I'm getting a text. Let me make sure it's nothing important. Anyway, okay. But yeah, this is a really, I really like this fund. I really like that fund. ULTY pays for gas in your car. Heck yeah. Heck yeah. YMAX pays for my electric bill. Sure. Coinbase pays for, yeah. Now that's a good plan too. And I always say these things aren't for young guys, and you've heard me say that a million times. But anyway, if you are a young guy, let's say you have Msty, but you're taking the Msty dividends to buy Mr. shares. That may not be the best example, but if Mr. comes back, you have to like Mr. And if Mr. comes back and you've been acquiring Mr. shares with the dividend, so then but by that point you make like a synthetic. You have a portfolio that's like half Mr. and half Msty. Well, that will also help stabilize the NAV and stuff. But that's good. I'm glad to hear that. I'm glad to hear that. Opinions only, Max. Okay. I know they're opinions only. I'm just trying to be cautious. But I told you what I would do, and you guys know my theory because I talk nonstop. If you've been watching the show for a while, I say the same things. I'm pretty consistent about what I say. I love unlimited upside, but I don't love unlimited downside. ULTI gives you kind of a mix of both. I mean, it gives you partially unlimited. If managed early, ULTI, I really think ULTI is a great bullish investment. If you were sure the market was going to go up, I think ULTI would be better than ULTY. If you were sure the market was going to go down, between the two of them, I think ULTY would perform a little better. Now, given that it depends on a lot of factors, but that's kind of what I think. And I'm the kind of guy that's conservative, and I don't have as many years to make back a loss as a guy that's 25. I can't afford to take as many risks, so I usually lean towards the safer ETFs. But I see what's happening too. I mean, I sold a third of my ULTY position to lock in profits. So, I mean, it's not, all sunshine and butterflies or whatever the expression is. All right. So trucking, you're trimming your massive position in WPay, cutting it to 2,000 and redeploying. Okay, great. Okay, perfect. So have you liked WPay so far? Tell me what you think about WPay. I've been really happy with mine. You trimming it, you probably made some decent money because the market's pretty high, depending on when you bought it. I mean, let's look at WPay since inception. I mean, WPay is an impressive fund, especially if you knew the market's going to go up. It's going to lose a little extra in a down market, but that's what in the old days covered call funds had buffer. The new iteration, the second gen covered call funds don't have like blocks, no buffer. It goes down a little bit faster, but it all has other. It's not really a covered call fund. It's lightning spreads, a different deal. But WPay doesn't use lightning spreads, but they use a little bit of leverage, so it goes down a little bit faster. But I bet you've done pretty well on WPay. Look how much better it's done than ULTY, especially since July. ULTY just never did recover the July peak, or it hasn't yet. But did you like WPay? Why are you getting out of it? Was it not enough yield? Let me know. Okay, you liked it. Okay, good. Okay. Well, nothing wrong with taking a profit. Yeah, and I don't think you should. If it was for me, I wouldn't have $100,000 in any one thing. Go put it in 5 things. They don't have to be what I would choose, but you have lots of good choices out there. You have, you've mentioned some of them. But I think that's good. But anyway, so you probably made a nice little profit on that $100,000. Yeah, book the profit like you've done. Cut it to 2,000 shares. So then you can get 2,000. So that's 20%. So you could go get 20% of 4 other things. And I've given you, or there's plenty of ideas out there. Yeah, absolutely. Yeah, Chuck. And I'm sorry I didn't really realize the question at first, but I'm happy to answer questions like that. Should we go back and see if the market's moved? See if did Bitcoin settle down? What's going on with Bitcoin? Let me try to. Yeah, I mean, it went up. It probably had a news event or something. It was right at 7:00. And it ramped all the way to 107.5, and it snapped right back to, within an hour later or less, snapped right back to 106.1. But now it's going back the other way. I mean, And that's a bullish pattern. I mean, things are looking good. I mean, next stop on this thing, hopefully 107 by tomorrow would be a win for the bulls. A close over 107 would be a win for the bulls. A close back under this most recent level, somewhere down here, would be the bears pushing us back. They want to push us back to 104. They really want to push us back to under the moving average and get the trend going the other way. But for right now, that looks good. Let's look at S&P. Now, S&P is, I mean, I know it's hard to see, but it is, it's kind of pulling back a little bit, but ever so slightly. I mean, it's basically not moving. It's basically not moving. My VIX versus VIVIX indicator, it's a ratio between VIX and VIVIX. And I only have daily on there, but that's fine. Okay, when both moving averages are red, it generally means that watch out, it's a warning sign for the market. And especially when both moving averages are red, and like it was back in April, the ratio is under the moving average. And especially if the moving average death crosses, the ratio is under. But let's pull up the chart underneath here. Where is that chart? I think maybe it moved down here. Well, I had a chart on here somewhere where I could bring up the market underneath it. But anyway, so this thing started it gave double warning signal, in other words, double red lines. It was one green line for a while at the end of October, and it rallied for a little while. But then we went back to double red lines October 31st, and the market's been no good since. I mean, it has been a good time to be cautious, So I'm keeping an eye on this. I don't know why I can't get the other thing up there, but let's do this. SPY. It says it's already up. New price, or no, not that. How about this? Hang on. Let me show you. Well, that's actually, you can see it there, but you can see it doesn't always work, but the market also went to warning symbols right there October 2nd. And sure enough, within a few days, we got a pullback, and then we're double red right in through here. And the market goes, it's not a perfect indicator, but then the market went one red, one green and went up for a while. But then look, it went right back to double red right on October 31st and it stayed there. So, then back here, the best example is, we had double red starting on the 24th. And it's part of the reason I sold Msty and Alti, because I just knew that it just looked like the market was going to crash. So I waited till the last day of February, but I dumped some and then picked it up after Liberation Day. But you can see nothing when the ratios are both going down and the ratios underneath it and dropping. It just puts the market under pressure. It means pros are buying protection. And then the market gives you an all clear whenever they're both faced up, or it gives you a neutral signal when one's green. So sure enough, right here, you got a neutral signal by May 15th, but then it was really late. But then right here on July 23rd, you got a buy signal, and that was a great time for the market. Between July 23rd, it was either double green or single green. I mean, so in other words, neutral or bullish, all the way up until October 1st. And that was a great time to start hedging. It doesn't always work, but I look at things like this to inform my decisions also. So watch my live streams, and because I usually talk a lot about this indicator. And there's other ways you can look for there's other indicators that I haven't showed you yet that I use to try to look at crashes and try to look when you need to hedge and maybe when it's clear sailing ahead. Nothing works all the time. It's one of many things to look at. But in other words, I mean, I bought puts today, and maybe I'm stupid, but I bought some on Friday also. I didn't buy that many, but we may not be over. We may not be totally out of the woods yet. We'll see. What are you saying, Truckin? Has anyone caught HOYY being the only Granite Shares fund that is 25%? Oh, no, I didn't know that. All the rest are 50. So you bought 1,000 shares. Wow. Cool. How's it been doing? Let's pull up HOYY. Let's see here, HOYY, and it probably hasn't been around that long, but anyway, I just like to do stuff like this. Look, just typical. I mean, it's almost all of these. Well, almost all these strategies that are actually covered calls. And now I know they sell put spreads, but a put spread is a synthetic caller. But saying a caller is a covered call with the put. Anyway, those types of strategies, callers and covered calls, almost always protect capital on the way down better than the underlying. And that's definitely the case here. You can see as the market was pulling back, HOYY did a little bit better than HOOD. But it'll also go up slower because a put spread is a synthetic caller. You sell two puts, even though you don't own any stock. It's just as if you own the stock, sold a call and bought a put. It's the same math. I don't hate these as much as everyone else does, these Granite Shares ones. But I do see that like XBTY has been kind of a problem. And I don't know why. Some underlines just don't lend themselves as much to covered calls for whatever reason. XBTY, let's compare with BIT. What's the Bitcoin one? It used to be BITO, now it's BITI, right? Oh, it's IBIT. I was going to say BITI. What am I doing? Gosh darn it. Let's compare with IBIT. Now they don't sell IBIT options. They sell leveraged IBIT, and I forget the symbol. It's not that big of a deal. We'll just look at IBIT for the sake of argument. And so, of course, we should have looked at the leveraged one because this is down a little bit more, but it's because they sell leveraged options. But it's just been kind of a rough time. Look, it's been even if you would have bought, people hate XBTY. I always hear a lot of hate about it. Okay, I get it. It's disappointing. But if you would have bought the underlying, which is IBIT, and I know they sell leverage options, but just if you wanted to invest in Bitcoin, you're just going to not do covered calls, just go buy IBIT. Well, guess what? IBIT's flat. So, and this thing sells leveraged options and it's a little bit behind flat. I mean, it's probably doing what it's supposed to do. I hate to say it, but, you just have to, it's once again, it's when you got in. So let's say you got out, I think like July 10th of this year was the high of that move. Yeah. It doesn't look so bad there. It actually outperformed the underlying. It's just that, there's path dependency. It matters where you buy it, where you sell it, and so two people can be in the same fund and have a vastly different experience if one person bought it a month early. And maybe one person's dripping and the other person's not dripping. Maybe one person's on margin. Maybe one person's taking the money out to live off of and the other isn't. That's why I'm hesitant to give, or besides the fact that it's illegal, I mean, you can't really give advice on these. It's personal. Anyway, okay, so you got 5 shares of HOYY just kind of as a tracking position. Yeah, heck yeah. Heck yeah. And we got over here, we got bond, got 10 more shares of K yield. Heck yeah. Okay, I'm sorry you didn't get an answer from Howard this morning. It was that 2 weeks worth of district. Oh, yeah, okay. I'm sorry you didn't get that. I didn't really hear that. Here's what I really think. I'll ask him. I think his answer would be yes. But here's what I really think, though. I think they let it go 2 weeks to build up a little. I bet you still get 1 week. And because Howard's so conservative, they won't advertise this 1 week, but they aren't going to give it all out. Whatever they made, well, they've already announced it. It's 36%. But I bet you he really made 40%. And he's talked about this before. He's going to have a bank to protect the NAV and to help protect it. He's going to manage distribution. So, but I get your question. Was it for 2 weeks? So like, can we expect that amount every time or something? I'll ask him on Wednesday. But my guess is that he's paid a little bit less than he made, and he's got a little bit of a surplus going. You sold out of Msty, Richard. Okay. Well, I did too, essentially. I sold out of it in March. I had Msty NVDY. I mean, we can look at my I don't have it up here. Yeah, I do. Hang on just a second. So yeah, look at this. So on Msty, I paid $19.16 for this dog, and it's at $9 now. I mean, the worst one. I bought all single stocks at the wrong time at the high in December, and I got murdered. I bought Coney at 982, and it's at 583. I bought AMD. I loved AMD, and it was doing great when I bought it. And I got it at 852, and it's actually up. Okay. I mean, that's good. I shouldn't have sold that one, but anyway, I was tired of losing money so fast. And with the market going down in April, I didn't know that Trump would cancel the tariffs. I didn't want to be holding. If he wouldn't have canceled the tariffs, I mean, you don't tell him what would have happened. You know, my average cost in Alti is $6.93, but I looked at my dividends the other day. I just looked them up on here. I looked up Alti on here, and it's paid, since I've had it, it's paid $4 worth of dividends. I'm a six, so I have like $2. If it has to get to like 2.5 before I, you know what I'm saying, that before I even break even. And by the time it'll get to 2.5 eventually, by the time it gets there, I'm going to have weekly dividends, and I'll have a lower cost by then. So, you know, on Alti, I'm all right, but you know, but on some of these, on blocks was the one I got murdered on the worst. Oh my God, XYZY got it at 1384, and it's at $7. I mean, I'm out of it. I just have fractional shares. Anyway, you guys get the picture. So, I mean, but yeah, I just got single. I got in single stocks at the wrong time. Now, once again, I wasn't trying to live off it. I want taking, you know, so it's whatever. But still, I don't like seeing the account balance go down any more than you guys do. And those things were going down even with the dividends included. But you know, so anyway, 35% is more likely the lowest yield they intended. It has 2 weeks. It had 2 weeks. Yeah, probably so. Probably so. Yeah, that's a good point. But and what did it really have? They opened it last Thursday night. They bought the position, so they had, as far as trading days go, they had Friday, Monday, Tuesday, Wednesday, Thursday, Friday. And then they declared today in the morning, so they couldn't have known what they made today. So it was based on 6 days, not 2 weeks. I mean, or they had 6 days worth of data to make the you know, the determination with it. Now, but granted, they could probably extrapolate how much they would make on the next 2 days before they have to pay. But I don't know how soon it comes out of their account and goes to the brokerage. Probably on ex-dividend day, it does that. So, you know, but I don't know the mechanics of it. So you sold Msty at 22, thank God. Well, you know, thank God for small miracles. Heck yeah. Heck yeah. Like, these definitely are not for everybody. But I do think that there is, between, if you don't like Yield Max, Curve might work. If you don't like Curve, maybe S-Bar from Simplify or CAIE, something more stable like that may work. If you don't like any of them, maybe a closed-end fund will work. I added a bunch of closed-end funds to the Max Factor just tonight, but we'll have a closed-end fund night where we compare all the closed-end funds. Maybe, you know, maybe CLM or CRF will work. I'm not here saying that the option strategy ones or the Yield Max ones are the only way to go. I have Round Hill. I have other companies. You know, it's just, like I always say, it's just because since I used to be a broker and I sold options to people, when I took my broker's test, I got 100 on the option part of it. There's nothing about options I don't understand the concept of, at least. When I took Jay Pestercelli's pre-employment test, I wasn't going to work there, but he wanted to see what I really knew about options. So he emailed me his pre-employment test. He said he's only had one person ace it in the 20 years that he gives it to traders before they come on the floor. I made it 20 out of 20. So I'm really good at the theory of stuff. That's what I'm good at. And especially options. I particularly love them. So that's why I'm telling you about these funds, but I'm definitely not telling you to go get them or or whatever. They're just what I know about. There's guys on there that know all about closed-end funds, and they have different websites, and that's all they talk about. There's guys that know about private equity and stuff. If I had been in banking or in real estate, I might be talking about REITs and bonds or something. But it's just I'm going with my passion. I'm trying to add value where I can. So, you only realize the loss when you sell. Correct. You lost 7,000. I'm sorry about that, Richard. That sucks. That sucks. All right. What's Leatherface saying here? Chippy WP. Are you asking which one I like out of those? Man, those are all good ones. But I really think I usually judge stuff by the option strategy. Chippy has a plain Jane option strategy. It's fine. It's doing well more as a function of the microchips have been doing well. It's nothing wrong with Chippy. But so I usually give extra credit when I see somebody like Howard doing poor man's covered calls like he's doing on K-Yield and doing all kinds of inventive strategies. I say K-Yield's the most inventive out of that one. Now that, WPay is a really good one also. I mean, and Chippy is nothing wrong with Chippy, but I really think a lot of its success is just due to the underlying going up. It's good, but so I would rank those K-Yield and WPay 1 and 2, and Chippy is 2.5 or something. Let's see. There's when you sell. All right. What else do you guys want to talk about? If there's anything else you want to talk about, put in the comments. If not, I've been going for a while. I'll let you guys go. I appreciate you being here. Don't forget, you can always support the channel at paypal.me, Max Convexity. I've been getting a lot of super chats lately, and I appreciate the super chats, but the super chats don't get here until the end of the month or whatever. But I appreciate the super chats. But I'm going to start displaying this just to remind people they can donate there as well. But in any event, I appreciate you guys. I'll be back tomorrow with the morning live stream. I'm trying to do better about having it right at 9 o'clock, which would be 10 o'clock Eastern. And I don't check Canadian ETFs. But anyway, then I'm going to do another show at 5 o'clock Eastern. I'll have my afternoon show on. And then tomorrow night will be this show again. And it's going to be a good one. Tomorrow night's going to be Tesla Tuesday. And we aren't only going to look at Tesla. Just like tonight we looked at Mr. and Coinbase. Tomorrow night we're going to do Tesla, NVIDIA, and what's another good one? Maybe AMD. Does AMD have enough to do? They have to at least have like 4 or 5. And they have to be 3 months old. Some of AMD's just came out, like AMYY or AAYY or whatever just came out. So it's not going to be old enough to be on there. But it'll be Tesla for sure. And I'll probably pick another couple of tech funds, maybe NVIDIA, and I don't know, something else. Maybe I wonder if, I don't know. I'm just going to go through there and see which other ones have at least 4 or 5. And, but be watching for that tomorrow night. Yes, absolutely. Hit the like button, hit the subscribe. If you don't, follow me on Twitter, do whatever. I appreciate it. Remember, not financial advice. Use your own, talk to your own planner. And I'm being serious about this because I'm just a guy on the internet. Yeah, and I can pass an option test. That's great. I'm still not a financial planner, right? I'm just a guy on the internet who has a knack for options. You think AMD tomorrow, Leatherface? I'll do AMD tomorrow. I'll do AMD. We'll do AMD, Tesla, and maybe we'll just all throw them in together, but that's not really fair. But we'll do AMD, Tesla, and NVIDIA underlines, and that'll be great. All right. Yes. I'll see you tomorrow, Truckin'. I'll see you, Leatherface. Remember, entertainment purposes only. Have a great night. I'll talk to you later.